Good morning, everyone. I'm Sushma. I've joined from IIM Bangalore Alumni Office. On behalf of IIMB Alumni Office, I welcome all of you to the webinar today. And we have with us our alum, Mr. Venkatesh Varadachari. Yes. Yeah. Uh, Venkatesh Varadachari is an alum from PGP 1997 batch, and he's an edtech entrepreneur. Prior to his entrepreneurial career, he was a proprietary trader and a hedge fund manager for around 14 years. He has been investing in global markets for around 25 years in his personal capacity and for his clients. And he also has a master's in financial engineering from NUS Singapore. Yeah, thank you, sir, for taking the session today. And after the session, I request all of you to post the questions in the chat window. Please do not interrupt in the middle of the session. Yeah. Once again, thank you for all of you for joining the session today. And over to you, sir. Yeah.
Yeah. Thank you, Sushma. Can everyone hear me?
Yeah.
Okay, super. Yeah, perfect. We'll start now.
Yes, sir.
Yeah, we'll start now. Yeah. So first we'll start with the disclaimer. None of this should be construed.
Hello, sir, you are on mute, sir. Hello. Sir, we are not able to hear you. Hello.
Yeah. Can you hear me now? Hello?
Now, yes. Yes. Now we can hear you.
Yeah. So first, some disclaimer. None of this should be construed as investment advice. Okay, it's all for information purposes only. Please do your due diligence. Yeah, with that we start. Okay, so the title of this presentation, basically I borrowed from this book called The Storm Before the Storm by Mike Duncan. So it's basically about the wave of chaos that preceded the 30 years of civil war in Rome, after which Rome became from a republic to an empire. Okay, so this was the period when Julius Caesar was assassinated, and then there was a civil war, and then finally Octavian Caesar became an emperor. So this is basically a regime change over 30 years. But if you go back for around 400 years, Rome was very, very stable. It was a republic, one of the first republics. And then the next 50 years, the institutions decayed from within because of corruption and so on, which led to the civil war and the rise of Caesar and so on and so forth. Right. So that is the first storm before the actual storm. So what is the parallel now? What we are seeing is basically the world is transitioning from the current global monetary order to a new one about which we do not know anything about. Okay, this is the transition period, hence the storm before the storm. And it appears as if nothing really is happening now, right? I mean, if all of us are going about doing our work and so on and so forth. But if you really look at what's happening in the global markets and in geopolitics, you can actually see the storm brewing. Okay, and if any of you had followed Dan Carlin's hardcore history, so this is the topic of that episode, Death Throes of the Republic. Yeah, so this idea that we'll be elaborating on this presentation. Okay, so this is the TLDR. The current global monetary system is on its last legs, and the world is transitioning to a new monetary order. So this transition is a process, not an event. And during this process, there will be a scramble for hard assets. And Bitcoin, gold, and silver remain the ultimate hard asset troika during this period. So this is the central thesis of this presentation. And this is how the webinar will flow. First, we'll have a look at the current monetary system. And then we'll see how we arrived at the current system. And then we'll see why the current monetary system is untenable in its current avatar. And what would a monetary reset look like? And from there, we'll see how all this is going to lead to a scramble for hard assets. And then we'll specifically cover Bitcoin and gold and silver. So this is the presentation flow. Okay, so now let's look at the current monetary system. So the current system is US dollar centric. US dollar is the de facto world's reserve currency. It's important to note that US dollar in its current avatar is not backed by any scarce asset. It's pure fiat. So the global monetary system is tied to the Federal Reserve that exports US problems to the world. USD remains the cleanest dirty shirt, the best among fiat currencies, all of which devalue against hard assets. So what we are seeing is basically, while we say that USD is not backed by anything and it's fiat and Federal Reserve is exporting problems and so on, pretty much all currencies are same, right? And US dollar is weakening against gold. But we are also seeing that our own currency, rupee, right, is weakening against US dollar, which in itself is a weak currency. So basically, we are saying that US dollar is better than most of the currencies, and all the currencies are basically inferior to hard assets. So in the current system, money as we know it is primarily debt. So it's a debt-based monetary system. And how is money created in the current system? Commercial banks create money when they issue a loan. And when you repay a loan, money is extinguished. And also when someone defaults on the loan, money is extinguished. Central bank acts as the lender of last resort to commercial banks. And if you actually understood these 4 points, it's very obvious that the system is inherently unstable. And why is it unstable? Because for money the money supply has to keep on growing. What that means is that for the system to survive, the debt needs to continuously expand. More and more debt needs to be created just for the system to stay afloat. And that is inherently unstable because there are limits to all of this. So, when we study economics in textbooks and all that, the textbooks explain the current reality. And oftentimes, we think that's how things should be, or we feel that the people have clearly thought through the ramifications before arriving at the current system. Unfortunately, that is not the case. Currently, we have the global monetary system is in the left quadrant, as in we have central banking in pretty much every country. And not only central banking, but the banking system is fractional reserve banking. Okay. So there are other configurations there. For example, there's something called free banking. Free banking means there is no central bank. While it's very difficult for us to imagine a world where there are no central banks, right? I mean, can you imagine India without RBI or US without Federal Reserve, right? It seems unthinkable. But you know what? I mean, Federal Reserve was created in 1913, and before 1913, the US never had a central bank. So there are a lot of private banks issuing private money, right? And the world was all right back then. So that is free banking, right? And full reserve banking is you lend only money to the extent of your deposits, right? Current system is fractionally reserved. The banking system creates money through money multiplier. So all these configurations existed in the past. Right now, we have the one on the left-hand side, but it's one of the many configurations possible. And that's important to understand. And so this is how actually money, you understand this picture explains to you how the global monetary system works. At the center, you have central bank reserves, with the banking system. And then on top of these reserves, the commercial banks create money. So this is the balloon model, which means that there are no limits to how far the balloon can expand. Right? If the animal spirits are high, commercial banks lend more money, and if they're afraid to lend, then the trust is low in the system, then they shrink. Right? But this balloon can expand quite a bit. Right? What we study in textbooks is we see a triangle, and then the reserves are at the base, and on top of that there is a banking system creates assets in a triangle shape, but that has limits. This doesn't have limits, and this more accurately reflects the reality. So end of the day, right? I mean, you need to understand only one thing in this section. This is a picture of US $1 note as it is now, and for us, this looks perfectly fine, right? We don't see anything wrong with it. But you go back 150 years or so, this was the silver certificate or $1 silver. As you can see, it says $1 silver payable to the bearer on demand. What this means is that this piece of paper with some founding father's picture could be exchanged for a scarce asset, that is silver. So this was money back then, right? And this is what we have now, right? So if you go back 150 years and then tell the people who are living then that, look, this is what we consider money, they would really be surprised, even though, I mean, for us, it all looks okay, right? Then the question is, how did it come from here to here? Yeah. So now we go to the next section. So are there any questions till now? You can just unmute and ask. Okay, no questions? Then I continue.
Okay, I have a
Okay.
small question. Sorry,
Yeah,
can
yeah.
you?
Yeah, tell me, yeah.
Yeah, in one of your initial slides, you mentioned that the system is inherently unstable. Why do you
Correct.
say so?
Yeah, because
these are very basic monetary economics, what you have covered in slides so far. And
yeah.
the system works on like that. So just curious, why do you summarize that it is unstable?
Yeah, it's unstable because what you are seeing, I mean, you see, right? I mean, in 1971, US dollar went off the gold standard, right? After that, we have been having a series of boom busts and all kinds of bailouts, right? Why do you think 2008 happened? Right? A great financial crisis. And we'll have one more coming now, right? A couple of years back, Credit Suisse just disappeared, right? Too big to fail bank, right? How did that happen? Right. So my contention is that these are all manifestations of the design of the current system. Okay. If you study the gold standard, you would find that the system is inherently self-correcting. Okay, if you are profligate, then the gold flows out of the country, and then the money supply tightens, and then automatically unproductive activities get eliminated, right? Likewise, if you are doing well, then gold flows into your country, and then money supply eases, and then you do more. So it's self-balancing or self-correcting. In the current system, you have all these central bank bailouts, QE, QT, all of that. All these are manifestations of the built-in instability of the system. The system is not self-correcting. The debt has to continuously expand. Do you understand? When I say that the system is, the money is in current system is debt-based. Okay? For everyone to have more money, the debt has to keep on increasing. Okay? But there is only limited number of people living on the planet, right? So there are limits to how much debt people can take. For example, on your personal balance sheet, right, or your household balance sheet, can you keep on increasing your loans, debts? At some point, you don't want to pay back, right? Hello, am I clear?
Okay, no, so you can continue because otherwise we can argue on this because
No,
system
there's not
has
argument. This is just a thing. Okay, we will discuss it later.
theoretical
Okay.
background is totally different. You can have your opinion, that is perfectly good, but indiscipline in the system is something different from the basic design of the system.
Yeah,
So
we'll discuss. We'll discuss
indiscipline,
it.
yeah, indiscipline can lead to various problems. I totally agree on that. So yeah, we can continue.
Okay. Okay, so how did we get here in the first place? Let's go back a couple of 100 years. Say in the period between 1850 to 1914, pretty much most of the world was in gold standard, except for India and China. Okay, and this was a period of great prosperity and technological growth. And so how did the system work? Currencies were convertible to a fixed quantities of gold. So there was a exchange rate between a currency and gold. Okay, this means that we were living in a world of fixed exchange rates. And London was, back in the day, London was world's financial capital and world's banker. US Federal Reserve was created in 1913. And in 1914, we actually had a world war, right? So what was good about gold standard was that it kept government spending and money supply growth in check. Okay, you can print money only to the extent of the gold that you are holding. So the system is self-stabilizing, even while there was a credit cycle with ups and downs. So generally, back in the day, you would have credit cycles, right? And but the things would even out because of the self-stabilizing nature of gold standard. Gold would flow from countries with trade deficit to countries with surplus. Central banks can enable faster adjustment via interest rates to attract or reduce capital flows. So this optimizes for long-term stability at the expense of short-term fluctuations. Over the short term, there would be booms and busts, but over the long term, the imbalances do not build up. And most central banks were privately owned. US had free banking till 1913, and 2/3 of world's gold was in bank vaults. When you say bank vaults, private banks. And what are the feature of economies back then? Gold standard, free trade, low taxation, and small governments. The US had income tax only after on the same year that Federal Reserve was introduced, like 1913. Before that, there was not an income tax, and we didn't have democracies were not rampant back then. We had monarchies in Austria, Russia, Germany, and many other countries in Europe. So this period was known as the Second Industrial Revolution. We had a lot of technological advances. This would dwarf what we have right now. So by 1914, US was the largest economy in the world. Comparable to the next three big economies. It had 40% of the world's gold reserves. And then we had World War. And because of World War, countries had to print money, and they went off the gold standard for that. And then after the end of the war, Britain came back to gold standard at the previous exchange rate. And Germany hyperinflated, while France devalued the currency and then went back to gold standard. So this was this was immediately after the World War I. So this caused a lot of problems, and then you had trade wars, protectionism, and so on. And then as a result of all these things, you had a boom bust. The boom was essentially the Roaring 20s in the US, when the stock market went up significantly, and then the Federal Reserve tightened the money supply, as a result of which there was a crash, and then you had the Great Depression. Yeah. And one by one, all the major currencies were forced to go off the gold standard. And in 1933, the US confiscated gold from its citizens. Okay, Executive Order 6102. And only in 1974 they were allowed to own the gold again. So the citizens are forced to surrender gold at 20.67 per ounce, and then after these were collected, it was immediately revalued into $35 per ounce. So basically, the U.S. government shafted its own citizens. Right. And then after World War II, we had what's known as Bretton Woods. So after the World War II, US had all its industrial capacity and also gold, but the Europe was in shambles, Japan was in shambles. So the global leadership shifted from Britain to US. And as per the Bretton Woods architecture, US dollar became the global reserve currency, and it was made convertible to gold at $35 per ounce, but not for citizens or common men, but for the other governments, right? And all other currencies were pegged to, not pegged, had a fixed exchange rate to gold. So we actually had a fixed foreign exchange system, and US dollar was fixed to gold, okay? And so again, what is the downside of being on a gold standard is that, as I said, you can't, you can't print, governments can't print as they please, right? So, and then what happened? Let's move on. So the trade imbalances accumulated after that, and also US engaged in costly war in Vietnam. They started printing a lot of dollars, beyond what is allowed by the gold standard. And so the other countries were worried, right? So France started repatriating, converting the dollar holdings into gold. And before other countries could do that, we had a Nixon shock and US dollar went off the gold standard. Right, and suddenly the world changed. So this is when the previous, the Bretton Woods changed to Bretton Woods 2.0. Okay, so John Connolly, US Treasury Secretary back then said, US dollar is our currency, but your problem, right? And suddenly, I mean, just like that, US dollar stopped being backed by anything, okay? And what the US also intelligently did was basically entered a deal with Saudi Arabia and ensured that the Saudi oil would be priced only in dollars. Okay, and then so what this meant was that this created a continuous demand for US dollar. Right? This is the petrodollar, and because most countries, including India, are importers of oil, so you need dollars if you want to get oil. Yeah. And then so this period suddenly the currency started floating after that, because the whole system was gone. And the Jamaica cuts happened in 1976, but between 1971 and 1976, currency started floating, and gold started floating, right? So this Jamaica Accord basically acknowledged the new reality which was already in place. Okay, so what you find is that the system that we have now, right, which is what we have now, is basically one big jugaad. It's not like the countries sat together at the table and decided what to do and so on. Okay, one fine day Nixon decided to close the gold window, and then we have the current system, right? So it was unilaterally decided. The other countries had to accept that because US was still the hegemon, and the only other countervailing force was USSR back then, right? And after the demise of USSR, basically, I mean, US had a very long run as a unchallenged hegemon, and they could pretty much do whatever they want. So now we will see why the current system is increasingly untenable. Okay, any questions so far here? Okay. So what has changed now? Why can't the current system continue as it is? We'll see that. The first is basically the geopolitical power balance has changed. Now we have rise of China, right? In many ways they are by many metrics, they're better than the US. And then even countries like India, Russia, the global South, right? They're growing in importance. I mean, still nowhere close to the US, but they are no longer pushovers, right? And then after in 2022, basically US weaponized SWIFT and kicked Russia out of SWIFT. So now other countries start wondering, I mean, if they don't toe the US line, they would also be kicked out of SWIFT. So people want an alternate system. And more importantly, what has changed was, in 1945, US was the largest creditor nation in the world. They had the most gold and they could dictate terms. Now they are the largest debtor nation in the world. They can still try bullying people around, but people are not impressed. And then you have all this, right? I mean, US goes around telling people how other countries should run their economy and so on. But then you had the great financial crisis, banking crisis, all that happening in the US. All these bailouts, socializing the losses, privatizing the profits, everything, endless QE and all that happen only in the US. So basically, people have lost trust in the leadership of US. And so what does this really mean, right? So basically, the reserve currency issuer has no financial discipline. The on-balance sheet debt of US is 38 trillion. And if you add the off-balance sheet NPF off-balance sheet liabilities around 100 trillion, yeah. And there's a lot of money, right? And so basically, what has happened over the last 40 years is that we had a biggest bubble in the world. I mean, the stock market is not the big bubble, it's the bond market. It's a US Treasury bond market. And it's about to burst. We'll see why. So if you look at the US public debt, I mean, this is not updated yet, the chart with Fred, but it's already 38 trillion. And this is debt as a percentage of, this on-balance sheet debt as a percentage of GDP. You'd see it's at levels previously seen only during wartime. That's, World War II types, right? And this is right now we are actually not in a war, we are in a peacetime, and already we have debt at those levels. And so this is the Rubicon moment. You look at this is the interest payment. I think this year, the US interest payment has exceeded the defense budget for the first time. And the historian Niall Ferguson says that, he has studied empires of the past, and so he calls this as the Ferguson limit when the interest payments, debt servicing, goes beyond the defense or military spending. That signals the demise of the empire. Okay, anecdotally. So we are only seeing hockey sticks on everything, right? So US debt situation is a train wreck. And so why is this important now? I mean, they have been doing this for 40 years now. What has changed? Why should we be concerned now, right? This can this go on for another 10 more years? Let's see what's going on, right? This is the biggest buyers of US debt from June 2024 to June 2025. So can someone tell me which country is ranked first? Can you read the chart?
Cayman Islands.
Yeah, Cayman Islands, right? I mean, you don't expect Cayman Islands to be there, right? So it's basically hedge funds there, right? And who else is there? Belgium, UK, France, Canada, Japan. This is like friends and family, right? Belgium is basically EU, and then you have UK, France, Canada. UK and France themselves are in very bad shape. So is Japan. And then you have stable coin issuers like Tether and USDC, right? So these are, can you imagine? I mean, Cayman Islands is the largest buyer of US debt last year. And then stable coins are in top 10. So
what is stable coins?
Which one?
Stable coin issuers, who are they? Like, what is it?
This is a Tether, right? Tether and Circle. The top ones, right? The crypto stable coins, USDT. USDT is Tether. USDC is other one. So these two. I mean, it's in black, but if you the printing is very small. But let me read that. Tether, Circle, stablecoin issuers are represented by Tether and Circle as proxy. It's taken only these two of this. They are the biggest ones. Yeah. So you're not finding the Indias and Chinas and Brazils and so what does this tell you, right? It means that while the US is in a treadmill, the debt burden is going up, they need to issue more and more debt, and precisely at this time, the world does not want their debt, right? You see that? Yeah. When the supply is high, the demand is reducing. So this is a lethal cocktail. Look at this. The smart buyers have stopped buying. The foreign official holdings, central banks and governments and quasi-government agencies, it stopped growing, right? And after force feeding US Treasury to Japan and the UK, right? I mean, they are vassal states, right? Still, this does not go up. And who is buying then? Foreign private holdings, private banks and investors. I mean, it's the writing's on the wall now, right? I mean, the demand for US Treasuries has disappeared, incremental demand at least, right? In fact, people are reducing their holdings, including India, at the very time when the US needs to issue more debt. Yeah. So, yeah, let's see this. So how does all this manifest, right? So today, the sovereign governments the world over are the biggest issuers of debt, and because they need to keep their interest payments low, the interest rates are artificially repressed everywhere. So the savers find their wealth and purchasing power eroded year after year after via inflation. Let's say in India, inflation is 10%, right? I mean, not the government not the government number, but you are living here, you are consuming fuel, you are sending your kids to good schools, you're going to decent hospitals and so on. You know what that is, right? I mean, I can tell you it's nowhere close to, I mean, it's way higher than what the government tells it is, right? So what does it mean? You are getting some 5% in bank, and even that interest is taxed, and your actual inflation is 10%. So basically, your money is losing purchasing power. What does it mean, right? The wealth is being transferred from savers to borrowers. Inflation acts as a pump, transferring purchasing power from savers to borrowers. So in the current architecture, the rest of the world pays an imperial tax to the US. US ships green paper with dead founding fathers, pictures in them, and they are getting real goods for that. And so after what happened to Russia, the global South wants to de-risk themselves away from US dollar, because all this uncontrolled debt has limits, right? And it's not just the US. If you look at the modern developed nation democracy model, it's the welfare state, the big government, uncontrolled deficit spending. So these are features, not a bug, right? UK is in deep shit, so is France, right? And if you look at the other members of the Five Eyes, Canada, Australia, New Zealand, all of them have very high, for example, real estate prices, which is good for the current owners, who are basically old people, but it's it's really affecting the next generation or younger people, right? So in this paradigm, the developed is the new developing. I mean, UK and a lot of talk going on. I mean, that both France and UK may need a IMF bailout, right? I mean, who would have thought this, right? I mean, back in the day, I mean, it'd be countries like India and other people, African countries, South American countries, Argentina. These are the countries who would want IMF bailouts. But now the developed is the new developing. Again, I come back to that. The same thing. The thing is, the purpose of a system is what it does. I mean, this is a famous quote by Stafford Bear. Posey Wade. You don't look at what people say, you look at what people do, right? So this is what it is. And so it's very clear like, I mean, these countries are in trouble, economically speaking. And all this, the debt has hit a hockey stick. And nowhere do you see austerity. As in, it's difficult. I mean, if you're a politician, who would vote for you if you say, I am going to cut the expenses, raise taxes? Who would vote for you, right? So nobody wants to do that. Right? Everybody wants to cut taxes. Everybody wants to give freebies and so on and so forth. Everybody wants to spend. And obviously, you don't have enough tax receipts because you're cutting taxes. So basically, you borrow. Right? In Barack Obama's words, it's no big deal because we owe it to ourselves. Right? That's not true. So, so system is in, the way things are going, there's going to be a reset. Either it's forced or people sit together and talk is what we need to see. Now, what are the possibilities? We'll just see. I mean, right now, people are not even talking to each other. I mean, people are fighting with each other, US, China, and so on. So, we are not in a situation where people are sitting at the table, talking to each other respectfully and trying to figure out a solution. That's not what's happening here. And now, can we have a new reserve currency because China is the new power? Yeah, even China themselves don't want to do that. It looks like, right? Because the same issue happens. Because if China, CNY becomes the reserve currency, all the ills that US is facing now, China will face a couple of decades later, and they don't want that, right? CBDC, global CBDC, very difficult. I mean, no one is united. So basically, what are some of the other possibilities then? We have maybe Bitcoin, or maybe you go back to gold standard or bimetallic standard. Maybe all these things are maybe because all of these have challenges. Okay, and at the moment, US is still the cleanest dirty shirt, but it's getting dirtier by the day. No government, including China, wants a gold standard because it's a constraint. No politician wants that because then you are disciplined by the gold standard to limit your spending, have a small government, and so on. I mean, if you end up doing all that, it's no fun being a politician then, right? So that's it, right? So more spending, lower taxes, higher borrowings, debt monetization. So these are the current trends everywhere. And there is nothing that gives us comfort that these things are changing anywhere. Okay. Looks like even if people come out with a new system, these things are there to stay as features of the modern democracies. And to add to our woes, I mean, we are saying that the UST is the biggest bubble and so on, but think about it, right? I mean, there is no other market that is deeper than the UST market. Right? It's bad, but at least it's got a redeeming feature of depth, right? So, so these are the challenges. So this is a situation we are clearly current system is untenable. We are transitioning from this one to God knows what, and there are different configurations at the moment. A lot of things are possible, right? So let us see what these politicians are telling. I mean. So early 2025, after he was appointed, Scott Bessent said, we are going to monetize the asset side of the balance sheet. Yeah, you can read whatever you want from that. And then last month, after the Genius Act, Putin's advisor said that America is trying to change the rules of gold and cryptocurrencies. Remember how much debt they have, right? So US trying to do, nobody wants the current situation, right? US wants to extricate. Other guys also have US treasuries. They want to get out of it, but you can't do it at one go because no market is that big to absorb that, right? So we are seeing the contours. Think about it, right? The Genius Act was introduced in May 2025 and signed into a law in 18th July 2025. I mean, it's like May, June, July, less than 3 months, right? This fast, right? This doesn't happen usually in the US. You're also having Cynthia Lumens tabling the Bitcoin Act of 2025, right? So this is not yet an act, So they're still on the table, right? But these are being seriously considered. And you already have executive order by Trump, establishment of strategic Bitcoin reserve in March 2025. So just like that, when I did the first presentation on Bitcoin 2021, GME Domain was saying this guy is saying that guy is saying that, Bitcoin is this, Bitcoin is that and all, but now it's already a strategic reserve asset, just like that. Yeah. So, so now we will see what are the choices generally in front of countries in terms of alternative avenues for US Treasury. So any questions till now? Okay. So we'll see scramble for hard assets. That's the next chapter. So can someone tell me what is a hard asset, and how do you how how do you know or if there are two assets, how do you know which one is harder than the other? Can someone tell me?
Physical presence.
Okay.
Worldwide acceptance,
See,
such as gold.
yeah, US dollar is worldwide, accepted worldwide, but we don't consider it as a hard asset. Correct. So that is not a precise definition. What else can it be?
Ease of
Something that
liquidation. Ease of liquidation.
Okay.
something that does not depreciate over time compared to the other asset would be a harder asset.
Yeah. I think that is the closest. Closest. Yeah. Any other definition? That's good. Yeah. So look, at the end of the day, what we want is preservation of purchasing power over time, right? Let's say you work hard, and let's say I'm just throwing a number, you earn $100,000 today, right? And with $100,000, you are able to buy a bunch of stuff. And you being prudent, you don't want to consume everything. You spend 10,000 buying stuff, and you keep the other 90,000. And you think, look, I'm going to save this money, $90,000, and I'm going to buy the same 10,000 worth of goods 9 times in the next 9 years, right? That's a very reasonable expectation, right? You want to do that because if your money is holding value, or as in holding purchasing power, you should be able to do that, right? So basically, hard assets maintain purchasing power over time, long periods of time. Okay, no, yeah. So before that, we will let's see this lesson from the past, right? In 1800, India and China were around 45% of global GDP, right? Difficult to think, right? Unbelievable. And both China and India were on silver standard back then. Rest of the world was also in silver standard or bimetallic standard, silver and gold. And gold-silver ratio back then was around 15 to 16, depending on the US or Europe or wherever. In 100 years, basically, Britain has moved to gold standard. Remember, Britain was the hegemon, right? World leader back then. Germany also. And then US in early 1900s moved to gold standard. And China and India were still on silver standard. And as top economies, right, big economies in Europe and US moved from silver to gold, there's a relative, the relative price between gold and silver changed, and it moved from 15, 16 to 33. Okay, even as silver got demonetized. What do you mean by demonetized? It stopped being used as money. It still had industrial use. So by 1900, the combined GDP of India and China fell to less than 20%. Okay, a lot of it is due to exploitation, repatriation of Indian wealth to the UK, opium wars in China, and so on. But even so, a good chunk of this reduction in global GDP, right? I mean, India's and China's wealth and the productive capability is because of demonetization of silver. So essentially, they were on the wrong side of the trade, right? And the Europe and US on the other side of the trade. So what is the lesson, right? When the regime shifts from one to another, this is high stakes game. If you are on the right side, good things happen to you. Otherwise, your purchasing power shrinks, your economy shrinks, so on and so forth, right? So right now, we are transitioning from one system to whatever, we don't know where it's going to go. It is very important that we align ourselves with the right trends here, right? Otherwise, it can be really crushing. So now going back to what is hard money, basically you want money that is scarce. Scarce money, if that is scarce, then it preserves purchasing power over time. When I say time, means not 6 months or 1 year, but over decades. We want money that has decent stock. Stock as in the amount of commodity that's available for people to invest. And we want money that has a small flow as possible. What is flow? Flow is the annual incremental production. Okay. So let us say there is 100 units of some commodity available, and incremental yearly production is 2. Then the stock to flow ratio is 100 by 2 is 50. Okay. And higher the stock to flow ratio, the harder the money. Why is that? Basically, let's say, right, if there's 100 and then people are they are converting their hard-earned effort or work labor, right, into that asset, right? And instead of 2, and then the price increases because people are investing into that asset and so on and so forth. And then if it's possible to increase the supply of that incremental supply in 1 year, say instead of 2, if I can increase it to 50, then that's going to crash the price. Okay, what is very important is the annual incremental creation of that commodity has to be small compared to the existing stock. Okay, fundamentally this defines the hardness. And if you let's see how are the hard assets ranked at the moment, right? So right now we are in epoch 5 of Bitcoin. So that puts a stock to flow ratio of Bitcoin at 120. Hardest asset there is. Gold is 65, pretty high. Silver is 20. Platinum is 10. Platinum is rare, rarer than gold. But the thing is, most of it gets consumed. So the available stock is very less. So the incremental output compared to available stock is quite high. So the S2F is 10. And fiat currency like US dollar, you can take a guess, right? Yeah, right. US dollar, Indian rupee, and so on, right? I mean, when I graduated from IIMB, the annual compensation was around 2.5 lakhs per year, right? Now I don't know how much it is, 35 or 40 or whatever, right? It's the same job, right? It's not like people have gotten smarter, right? In fact, the supply of graduates is more now compared to our time. So this is all money inflation, right? So think about it, right? So what this means is that 25 years down the line, if you extrapolate this, then a new graduate passing out of IIMB 25 years hence is going to get 3.5 CR as a starting package. Good for them, nothing wrong with it. But if that is the world that we are going to see in 25 years, where does it put you today? So how much money is enough? You think about it, right? So by this yardstick, fiat is very, very low. Actually, it's not hard asset. So if you're derivative trading, you would have been familiar with the concept called change of numeraire. Numeraire is basically the measuring stick, right? So people think that they're living in highly inflationary times right now. Wherever you go, the prices are going up, healthcare costs going up, school fees going up, college fee going up. Again, when I was at IIMB, the fees was like 50,000 per year. Right? Can you imagine? Now it's higher. So everything is going up, right? But then let's change the numeraire from because I mean you are measuring everything. You have a rupee balance sheet or US dollar balance sheet. You measure everything in those terms. Then things are going up. But let's change the numeraire from US dollar to Bitcoin or gold, and suddenly we find that we are living in a very extremely deflationary world. Everything is so expensive in Bitcoin terms and gold terms. When I say expensive, means inexpensive means they are getting inexpensive. Okay, incrementally, right? If you could buy something for 1 ounce of gold today, then it's costing 0.7 ounce of gold next year, and so on and so forth. So if you're if you're valuing your, if you have adequate exposure to these hard assets, and then you see your balance sheet in terms of those, then you find that the other stuff that you consume are getting cheaper and cheaper with every passing year, right? What about your income, right? Those would be shrinking too. If you are on salaried income, you are getting paid in fiat currencies, and fiat currencies are debasing against Bitcoin and gold. Then next year, basically, what was your salary income in terms of ounces of gold last year? How much is it now, right? Think about it. Yeah. So any questions here so far? Nothing?
So I have a couple of points, but I'll keep it for the end of the presentation.
Okay. So now this chapter will focus on Bitcoin, the hardest money there is. So we saw that the current monetary order is basically jugaad, right? US unilaterally defaults, and then everybody accepts it, and then forms a system, and that's what we have now, right? Unlike that, if you actually study Bitcoin, it's precision engineering, right? Very, very precise, right? And zero jugaad. And what's good is the hardest money there is getting even harder. What do you mean by that? So already 4 halvings of over in Bitcoin. We are in epoch 5. And so the stock to flow ratio is 120, right? Double that of gold. So in 2028, there is another halving. So the supply reduces by 50%. So in epoch 6, the stock to flow ratio is going to be 245. And then it's going to double again in 4 years' time. Right? So what does it mean? You're going to have nation state FOMO, corporate treasury FOMO, households FOMO, all that is there. So I think in 2021, when I got the presentation, this was the hash rate. Now see where it is, right? There is no FUD, right? It's getting stronger and stronger, right? This amount of computational power that's deployed to protect the Bitcoin network, right? And this is a price chart. Look at it. So it's only higher. If you see there are still drawdowns. It's still volatile compared to conventional assets, but the volatility has been reducing, and we are only seeing higher highs and higher lows. Let's look at supply, right? So at the moment, basically block reward is 3.125 BTC every 10 minutes or so, right? Already 95% of Bitcoin has been mined, and till the next halving, the yearly supply is like 1,64,250 BTC, not very high, right? And this will be cut in half after the next halving. So pretty much everything has been mined. Out of 21 million, close to 20 million has already been mined. So this is on the supply side. Now let's see what are the regulatory changes that are happening, right? There's been a lot of strategic BTC reserves in the US. Also, a number of countries in Europe are already started, discussing legislations to effect this. And so there's already an executive order in August 2025, which validates Bitcoin investment in 401k plans. This is people's retirement. Okay, how far we have come from last 4 years, right? From being something that people are skeptical about. Now it's now fully institutionalized. Okay, Fidelity was already offering 401k products in 2022. Spot Bitcoin, ETF, that's not ETC, ETF allowed last year, and already spot BTF, right, across all the brands like BlackRock and Fidelity and all that is 150 billion already, right? 6% of BTC supply, right? Very fast. Now there are newer players in town. So I spoke about what is that? Corporate treasury FOMO, right? Is anyone here familiar with MicroStrategy? Michael Saylor and MicroStrategy? Anyone?
Yes.
Yeah. So can you share some thoughts?
So MicroStrategy is basically almost owned and propagated by Michael Saylor, who is one of the most vocal advocates for Bitcoin. And he basically believes that, like you've suggested, that the current financial situation will, with the US, going downhill and all these so-called developed economies going downhill, there will be a massive default, and Bitcoin being, as you know, probably the hardest currency, if that's the right term to use, will be the one. Whoever owns Bitcoin will basically be able to at least save his wealth, if not increase the ownership of their own wealth.
Very good. But here is the innovation, right? So initially, if you go back, in 2020, it was a two-bit company. The company has been around since dot-com days. They had some money on the balance sheet, but like market cap is like some 1.5 billion or so, right? The company was not growing and all. They had some cash. That's it, right? So Saylor himself was a skeptic, Bitcoin skeptic back then, and then he had a change of mind. He studied, and then he invested the surplus cash. So that is the origin of the Bitcoin treasury company, right? So surplus cash, some of it he invested in Bitcoin. This is a publicly listed company, okay? So then the US GAAP and other things were lagging behind. People didn't even know. The accountants didn't know how to how do you mark to market, or how do you evaluate it, and all that kind of things, right? All this lag, right? From then on, there is a company which is deploying surplus cash to a company that now borrows money, issues shares to buy Bitcoin. Okay, this is the infinite money glitch. So this is the thesis. Michael Saylor is saying, okay, I buy fiat, depreciating fiat, and buy an appreciating asset. Okay, I use weak, soft asset to buy. I borrow soft asset to buy hard asset. Okay, there's an infinite money glitch, right? And the proof is in the market price, right? The current market cap of MicroStrategy is $75 billion, right? From 1.5 to 75 billion in 4 years, just doing this. Okay, their actual business is not growing. Okay, it's still there. Some two-bit business, right? Not only that, now he is offering consulting services to other corporate treasuries. Michael Saylor consults Microsoft, right? Microsoft must be having $75 billion in cash in their balance sheet, for all you know, right? MSTR market cap is 75 billion, right? So think about it, right? Now he's going around teaching other companies, big companies who have been managing corporate treasuries for decades before he even came into being, telling them how to play the game, right? So this is a MicroStrategy price chart. So you see here, 2020, that's when he started the initial small spike. That's when he started deploying the surplus cash of the company in Bitcoin. Now, see the share price, right? So the market cap is high mainly because of share price have gone up, and also he has issued a lot of new shares. Okay. So this is a list of top 100 public Bitcoin treasury companies. This is not the exhaustive public company list. This is the top 100. There are more. Okay. So MicroStrategy leads, but you also have the Trump's company, you have Tesla, all kinds of companies, Coinbase. There are some Bitcoin mining companies in the listed space, but a lot of otherwise normal companies are also here. Core Scientific is there. Interesting, isn't it? So these guys have Bitcoin treasury companies in the listed space. They have close to 1 million Bitcoins. We are not adding companies that are privately held about which we don't know anything, right? This is all in the public domain. And what is this happening regulation-wise in the US, right? So New Hampshire in May 2025, legislator passed a legislation that 5% of public funds can be invested in digital assets, that in primarily Bitcoin. But it's a small state, you say, okay, Texas, right? They have legislated a strategic Bitcoin reserve. And now 24 states have introduced or are considering bills related to established establishing Bitcoin reserves, right? So it's well underway. I mean, it's getting seriously institutionalized. Okay. Any question on the Bitcoin? Okay. So now we come to gold and silver.
I have a question.
Yeah.
So is Bitcoin a currency or an investment, right?
Okay. Bitcoin is a store of value. Let me put it that way. Is gold a currency? What do you think?
Gold is currently not a currency. Yeah, but at one point gold was currency, right? Because every currency was.
Yeah. So let me put it that way, right? So the primary use case of Bitcoin, as I see it, and as the market sees it, is primarily store of value. See, so basically, Bitcoin has been programmed to emit only 21 million Bitcoins. Okay, so the supply is hard capped. Code you can check, right? And so what basically it's engineered to be a scarce asset. Okay. Now, if you're asking me whether I can exchange a few satoshis for a cup of coffee in Starbucks, if that's the definition of currency for normal thing, I think that's not the best use case, mainly because of volatility, but even otherwise, right? So what we have now, also, if you're aware, there's a layer 2 Lightning network on top of the Bitcoin network, which allows this small payments, right? If people want to do it, you can do, right? So this one does not get into the main chain, right? Because you need to understand, if you understand the engineering of Bitcoin, block space is scarce. That's how it's been designed. It's not like Ethereum and all these newfangled blockchains where you can put anything, right? Right. I mean, you every 3 seconds or 4 seconds you have a new block. You can put all kinds of junk pictures and stuff like that, right? That defeats the purpose. So this is engineered scarcity, right? So which means that you don't want those small petty transactions going through the main network, right? But the layer 2 is being built already. It's built. You can use it for Lightning. I mean, you go to El Salvador, you find people using. There are places also like Bitcoin Beach and all where you can do small payments and buy stuff. People accept and so on and so forth. But to answer your question clearly, it can be used as a currency, but that's not the primary use case is store of value, right? Reserve asset. Let's put that way. Reserve asset for nations, reserve asset for corporates, and family wealth for households.
Yeah, so I have another question. In the future,
Yeah.
let's say there is another crypto which is engineered to be same as Bitcoin. Is there a what if that comes into picture? What if some economies?
Yeah. Very good question.
Okay,
Good question. Good question. I think
create a crypto which is as hard as Bitcoin, right? Because we missed putting our reserves in Bitcoin, but like 10 countries or 100 countries will say, okay, this is the new Bitcoin. We are going to put our reserves in that one from now onwards.
Yeah. So a very interesting question, and it's a very logical question to ask also, right? Let me turn that back on you, right? So basically, it's very interesting, right? I mean, it's good that you're asking this question because it makes you think. A very, very fair question. When I started studying Bitcoin, that's the first question I asked. I think about it. Bitcoin is open source, as you're aware, right? Which means that you can actually copy the code,
yes,
right? And start a new coin, right? I can have Venki coin or whatever your name is, right? You can have KK Mishra coin or Banu coin or whatever coin we can have. Exactly same code. Believe me, right? Right?
Yeah.
It's 1 day's work. Right? Less than 1 day's work if you know how to do it. Otherwise, also it doesn't take much time. Right? The thing is, why would the community follow you? You understand?
I'm not saying I'm going to create it. Suppose
No. What's wrong in you creating it? Nothing wrong. Right? I can also create it, right? Because
there are a lot of cryptos in the world anyway right now, right?
no, the architecturally they're very different. So that's why I'm not adding any of those names here, right? If you actually deeply study the philosophy, engineering trade-offs and everything, they're a world apart. Right?
Oh, yeah.
Right. Yeah. So I'm saying whether you create or a nation state creates or 10 countries join and create or whatever it is, I'm saying it's the same thing. You basically fork the current Bitcoin code. That's it. You copy it, right? Control C, Control V and change the name, right? That's all you need to do.
Yes.
Whoever is doing it, okay? The work is same, right? The thing then is, remember I showed you this one, right? So this is the hash rate, right? So this is the computing power that's currently used to mine Bitcoin and process transaction and so on. This is one hell of a computing power, right? Now, this is not going to switch. You understand, right? You hear what I'm saying?
Yeah. Yes.
So basically, it is the Bitcoin is a singular event. It's happened, right? Now, if someone comes with a different way of organizing the world and all that, I don't know, right? Maybe, right? Maybe someone comes with a superior way of doing it or whatever. It's a different thing, right? But simply cloning it is not going to work. Or any minor variation of that is not going to work, because why would anyone change it? Because they are on a winning trade, right? Already, if you notice, there will be something called Bitcoin Cash, right? So there's a sort of there's a book called Block Size Wars. You can read that. So there is some kind of a civil war within the Bitcoin community in 2017, right? So some people wanted things in a particular way, somebody wanted some other way, right? It's open source. People have to convince each other, and so on. So the chain split, right? So something called Bitcoin Cash, who wanted a more block space, and it's a different philosophy than currently what we have, right? The main Bitcoin chain, right? And they are their own valid reasons for why it should be that way. But if you actually look at the price, that's gone nowhere, right? So basically, people vote the miners, the node runners, the validators, all these people vote with their machines and their actions, right? They already voted, so it's one, right? So that's not going to happen. I mean, if you're saying there's another superior thing that's coming, architecturally different or whatever, I don't know. It's quite possible, but I see this as a fundamentally singular event.
Okay.
Yeah.
I'll just reply to Mr. Banu's query. It's a one-line statement. It's a new asset class which is being created and being promoted by the miners. So earlier the currency was based on valuable like gold or silver. Then it turned to fiat money, then SDRs, then treasury bills, and now this is being this is being promoted. So what your apprehension is actually very correct. If in future, 10 years down the line, some countries decide, or some new investor or some new techies decide, we don't want to come up with some new asset class, and they start pushing it. And if there are takers, then certainly what you said is very correct. Bitcoin will come down, and some new asset class will get introduced. So it's a very valid point.
Okay, so we'll move on. So look,
Mr. Venkatesh,
yeah, go ahead.
can I ask a question here?
Yeah, ask away.
Yeah, so just looking at history, there are two things which governments everywhere in the world have maintained monopoly on, for whatever good or bad. One is arms and ammunition, and second is money. So these governments draw their power from being able to control and regulate this.
Agreed.
So, like in India, for example, SEBI, the market regulator, it has banned licensed advisors from suggesting Bitcoin to customers.
Agreed.
You can't even recommend it to a customer. So,
agreed.
Isn't there a huge regulatory risk that as it becomes more and more mainstream, governments will step in and find some way to disrupt it? It could be a narrative of it being used for wrong reasons. Already that narrative is built that it's used for money laundering, terrorism, and all that.
Yeah, I agree. I mean, you're right. You're right. So, look, I mean, end of the day, right? I mean, governments are governments, right? We may like it or not, but a lot of problems are caused by governments themselves, right? all this, the Indian rupee or any other currency for that matter, losing value over time, it's primarily because of government profligacy, right? I mean, not one person, but the machinery itself, right? If you look at US, right, Gary Gensler, who was the previous FCC chair, he's a very smart guy, MIT professor. He actually knew what Bitcoin was, but he was in the way. He was trying to stop Bitcoin. People have been trying to get the Bitcoin spot ETF approved for years, right? And he was in the way, right? But he got pushed out, and things have come, right? So my answer to you is that regulations will change. I mean, which government? See, this is primarily challenging the government, right? As you said, government has a monopoly on issuing money, and that's how they control you, right? It's a legal tender, right? What government is issuing fiat, right? And that's how they control you, right? And which government? Do you think that the US embraced Bitcoin with open hands? No. They're continuously resisting. Warren Buffett said, Jamie Dimon will say, somebody will say, this guy say this, that, and all, right? Now it's already a strategic asset. They have no choice, right? It has reached critical mass adoption. And think about it. It's not promoted. I mean, one of our colleagues said sometime back, it is promoted by miners. There is no promotion, right? Bitcoin has no CEO, nothing. It's fundamentally an open source software with voluntary community, right? And they're not been able to kill that, right? Because there is no head, so you can't chop off the head of the snake, right? Nothing, right? It's everywhere. It's decentralized, right? So yes, governments. I mean, if see right now, it's all game theory, okay? In the sense that if the world is transitioning to, for example, say Bitcoin as the strategic asset, next one, right? Because it's not like people are sitting together, they're even fighting. China is fighting, US is fighting, everybody's trying to hold on to their monopoly or power and then enhance that and all that, right? So that being the case, in fact, I think a lot of, people say that, US has got a big stockpile of Bitcoin that's not disclosed, right? Officially, they are disclosed also. They are the largest disclosed sovereign holding Bitcoin. Next is China, but undisclosed also much large people say, right? So, they can transition and then once again, they can control they can be the global hegemon, right? Because if this becomes the reserve currency and they have the largest holding, again, they control, right? So, if that is the case, then sooner or later India will have to. No choice, right? And then these local regulators, they will just change, right? You tell me what changed fundamentally. In 2021, you go and read all the newspapers, media, Financial Times, Wall Street Journal, everything what they're talking about Bitcoin, whether the politicians or the Wall Street or even Michael Saylor himself, right? Now, what has changed for them to change their stance? You tell me. Bitcoin is still the same thing, okay? There's nothing that has changed, okay? The same old technology, same old, right? In 4 years, has anybody come and told you that, look, I was wrong because of this and this reasons. Now I stand corrected. That's why I'm embracing. No. Suddenly they'll say this, suddenly they're saying that, right? So this thing, terrorists are using and all. It's like the terrorists also use cars, right? Does it mean that we should not manufacture cars? Terrorists use roads. Does it mean that we should not have roads? Lot of things people say to promote their own thing, right? We need to be discerning, right? They will say what they want to say. Now, there's something called a digital currency, RBI digital rupee or whatever, right? I don't understand for the world of it what that is, right? Because our money assets is still digital. You tell me, your net worth is, say, for example, 100 units. How much of it you use actually as a physical cash? Everything else is in bank, right? In bank, it's only ledger entry, okay? In a spreadsheet, the numbers are there. That's it, right? Anyway, it's digital, right? So governments do things not to help you, okay? Government do things to increase their hold over the public. Okay, I get it, right? Get it. But basically, in the past, if say 1500s or something, the church and the state, I'm talking about the Europe, right? So US was not there and all that. So they were integrated. The church said that the king had the divine right to rule and so on and so forth. So it's like a mafia connection kind of thing. And then over time, the church and money state and church got separated. Separation of state and church. right? Now what's going to happen is separation of state and money. It's inevitable. That's what I'm saying, right? People resist, but eventually they will cave in. Right. So it's only a matter of time. Just wait and watch. Okay. Any other questions? See, I understand.
Can I ask a question?
The Indian government stance is singularly harmed the Indians because people could have made a lot of Indians could have made a lot of money, right? I mean, I'm saying that if government does not want to invest in a strategic Bitcoin reserve, understandable, right? But why are they saying that people should not invest or whatever, right? So the only difference I'm telling you in the US, even though US initially had that stance, right? People like Cynthia Lumen's senator, right, and many other people, they continuously educated the senators, educated the House representatives. They have been trying to push the bill for so on, right? I mean, initial bills were rejected. Cynthia Lumen's tabled only in 2014 that got rejected. Now they're persistent, continuously educating the market. You see the Bitcoin conference and all, right? How many of them are in the US, right? So, so the thing is, the market also needs to be educated, right? The people have done that. People have done that. People have educated the politicians and so on. And that's why you find all those regulations, current regulations, which are Bitcoin friendly coming in the US, right? So India, who has done that, you tell me? Not one, right? The politicians don't understand that, we get that. But who has gone and educated them and tell that, look, boss, this is not probably the right way of looking at it, right? What we are going to see is that suddenly one fine day there will be adoption because 50 other countries are adopting, so we'll also adopt. This means that we are actually not even taking a decision proactively, right? We are doing because 20 other people are doing. Is it how you decide, right? So I think, see, there are a lot of issues here, right? I mean, I have spoken to people, I have written to people also, right? But it is what it is, right? I mean, there is in 2022 some crypto draft was passed, some 25, 30 page thing, some bureaucrat wrote, and then when you read that, you understand that guy doesn't understand anything about these things, right?
Mr.
So,
Venkatesh,
yeah.
I had a question.
Yeah.
This is regarding, obviously, I definitely agree with you that Bitcoin is really a hard currency and almost very similar to gold. And if you look at it, a vast majority of the Bitcoin is now being held by, like you said, the US, China, some Bitcoin whales, big banks like HSBC, they're literally hoovering up all these Bitcoins.
Yeah.
The point I'm trying to ask is that just like the US decided that gold is going to be illegal, holding gold is going to be illegal for about 20, 30 years because it was a threat to the dollar. What prevents all these big governments, because they print all this money, they'll buy all the Bitcoins and then saying, okay, anyone else who trades in Bitcoin is illegal. So you're literally holding an asset for which you've paid so much of money, finding out that your trade has become illegal. Because there's a difference between holding the asset and actually breaking the law. The law is made by the governments. You may be morally feeling it's incorrect, but then it's legally wrong to deal in that.
No, I agree. And that is where I think India, I think probably we are missing a trick, right? I agree with you. But see, few years back, 4 years back, 5 years back, Bitcoin was illegal everywhere, right? Now it's pretty legit in the US. I showed you 100 listed companies. This is a list of 100 companies that these are companies, right? They are nothing to do with Bitcoin.
No, I agree with you. What my question is, just like holding gold was never illegal in a way for for hundreds of years, people have held gold. But US decided at one point for 20,
Correct.
30 years,
Correct.
okay, you have to sell the gold to me. Otherwise, you can't have that.
Yes.
So tomorrow the governments would say, oh, because Bitcoin is a big threat to the monetary order. It's a massive threat, and no one's come across it.
Look,
this is the first time such a threat is being made, and these governments are really shaken. So they can say that, okay, you cannot hold Bitcoin, you have to sell it to us because it's not something that we want an individual to hold.
Okay, to answer this, right, let me give you a diplomatically correct answer and another answer, right?
Yes.
Diplomatically, yes, if government, that's what government says, you have to give it back to the government, okay? Your only hope is that you pray to God that you live in a country that does not do this, okay? Nothing changes the fact that when US made gold illegal and banned citizens from, owning, what is wrong owning gold, right? For 1933, 1974, they had wronged the people, right?
Yeah.
That's reality, right? So let's
Even they're wronging the people now, because people like you and me who have worked hard to save assets, they're just printing money. And like you said, 20 years down the line, if they increase the salary of someone to 5 crores, what is the value of the money that I'm holding for 30 years? I've worked hard to make that money.
Exactly. So now you understand, right? So basically, this is the crux of the issue we are talking about, the entire presentation, right? The fiat currency issuer and the fiat currency user, it's an adversarial relationship. Okay. You can sugarcoat it whichever way you want.
Yeah.
Okay. So let's face it for what it is, right? You pray to God that you live in a jurisdiction that does not screw you over like this. Okay. I mean, you should be happy that we are in India, whatever you may say about US, right? India, we have never banned gold, right?
Yeah.
And Indian households, I'm talking not even people like us, I'm talking about uneducated people, maids, car drivers, and people like that. Indian households have a huge stash of gold. We are going to be one of the biggest beneficiaries of this gold re-rating, right? The households, right? No thanks to government. Okay.
Yeah.
People have the native intelligence have seen that. Look at rupee, right? I mean, US dollar is a weak currency and we are weakening against that weak currency, right? So in the native intelligence, the people have felt that, okay, buying some small amount of gold, a few grams here and there has, preserved their purchasing power over periods. I mean, they're not articulated that way, but in effect, that's what they've been doing, right? So look, if governments do that, you have to give it, and you pray to God that you're not living in a country where the government makes you do all this. But let me give another answer also, right? Bitcoin is peer-to-peer, right? Right now, the technology is there, Whirlpool and all that kind of thing, right? There is no way anybody can even track if you have. Let me tell you that, if you know how to do it, right? I'm not saying I'm doing it. I'm not asking you to do it. I'm just telling you it's a fairly sophisticated technology, right? And the hardcore guys are super smart, right? It's that is why do you think US is basically joining this revolution, right? Because they know that opposing it's not going. It's gone beyond that point where you could oppose and do all those kind of things. That we are past that point now. Okay, we are past the point of no return, right? So even game theoretically, strategically, the smartest move is to align with the movement. Anybody. You don't want to be the 150th country doing it. You want to be the first or second or third or 10th country doing it. Right? Then you extract tribute from the other 140 countries who are following you. Right? You don't want to be the last guy doing it. Right? Like the Bollywood policeman, right? If you look at the Bollywood movie, right? The last scene, the policeman will come after the hero has bet the villain and all that, right? All the work has been done. He'll come and arrest the guy and go, right? We don't want to be like that, right? But it is what it is here. I mean, we are unfortunately, I would strongly suggest you read a book called The Sovereign Individual. I think we are going towards a world where individuals are going to be sovereign, right?
Thank you very much for explaining.
Okay, so we will now move on to, I'll just wrap it up fast, gold and silver. So, look, Paul Tudor Jones is a very smart guy. This is an old one, okay? In my previous same, all roads lead to inflation, which means the hard assets, right? And you say the stars are really aligning now because if you, throughout history, if you see monetary, right, people have tried this game throughout, right? Trying to every time when a new regime starts, it's always tied to gold, right? And then slowly, people change this, change that, and then they deteriorate, make it full paper currency and all that, right? And then they take a big bath, and then again they go back to the first thing. Right? So that's been the case throughout. So there is no reason why things should be any different. More importantly, if you look at the historically gold silver ratio, 1980 at the peak of the bull market, it was 13. 2011, it was around 30. Currently, it's at 80. So basically, silver currently is trading as a pure industrial metal. Zero optional. It's basically optionality with a zero price. Basically, anyone who is selling you silver now is selling you free option of silver getting remonetized. Okay, if someone is selling you a free option, you should just take it, right? We'll see why now, right? Just see the global central bank, just follow the money, right? The biggest players in gold are central banks, not Indian retail or any retail. You have been seeing relentless buying, right? Year after year, year after year after. This is a chart. They've been relentlessly selling also in the past, but now it's all changing, and it's only going to accelerate. And it's not just buying. What you don't hear about is that countries are also repatriating gold from London vaults, New York vaults, and Switzerland, right? India also, RBI, Germany, Poland, all these guys, they're having great difficulty getting it. End of the day, you are just given it for somebody for safekeeping. They should give it back, right? If you ask, right? Right? Even that, they're finding it difficult to get. What does it mean? People are not only buying, but repatriating, right? RBI now wants Indian gold with Indian hands in India. We don't want anything in London. We don't want anything in New York. So is Germany, every other country, right? So basically, my gold is moving from west to east, primarily from New York and London to other places, which is good. This is the gold silver exchange rate. It's at 80 now. This typically happens at market bottoms, not market peaks. For people who think silver has run up too much, no. So this is the gold chart. It may appear scary because it's at a near vertical takeoff last 1 year. But this is not the right way to look at it. If you look at the log chart, you see that it's very, very reasonable, right? And this is how you look at it, because the y-axis is, each equal distance is same percentage, right? So we are going to see this huge move we had in 1970s. That's the kind of move we are going to see, and which means that we are just getting started. And in silver, we have not even started yet, right? I mean, the market has to take out 50 before the move actually begins, and then we're going to have a long way upside. So for people who think already gold has gone up too fast, too much and all, I mean, compared to what, right? Compared to monetary base, compared to money supply, federal debt, everything, the gold price has dwarfed them, okay? And emerging markets keep adding.